What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, guys, Jay Martin here, CEO of Cambridge House, and I'm joined right now by Gary Wagner of the Gold Forecast. Gary, it's great to have you on the show finally. How are you?
I'm doing excellent. It is a pleasure to finally get to work with you and help your audience realize what we're seeing in the precious metals right now.
Well, I look forward to that because we all need some help. Absolutely. So, it's your first time on my show. Why don't we begin, Gary, just with a bit about how you spend your time? What is it that you do? And give me the 30-second highlight reel, and then I'll start pulling on threads.
Sure. Well, I began as a commodity broker back in 1983, extensively studied Western technical indicators. About the 90s, candlesticks were introduced, but no one really knew how to use them. So I spent some time really diving into it. Wrote a book on candlesticks in 93 and developed a software application. And then in 2000, I kind of took a break as a single dad. But in 2009, I looked at a couple of charts of gold and I thought, this is really getting ready to explode with the recession in place and all of that. And so I started the Gold Forecast, which specifically looked at gold as a safe haven asset with the way fiat currencies were getting devalued back then as well as now. And that was 10 years ago. It's been a phenomenal ride. And that's where I got my art in gold specifically and crafted my basic strategy that I have for trading.
Right. Okay. And now talk to me a little bit about how you play the gold market how do you allocate capital, Gary?
Well, I am a trend trader by nature, and I am a hybrid technical trader. In other words, I look at the fundamentals behind the marketplace itself to get a sense for direction of that particular market. In the case of gold, I'm looking at how it's pegged against the dollar, the fiscal spending that has just been enormous to get us out of this tremendous recession, global recession, due to a pandemic. And from there, I believe that it's going to go up. Then I use technical indicators to signal when to buy, how long to stay in, and when to exit. What I like to do is to trail my stops up in the futures markets because no one knows when, but there's always a couple of times a year when gold will run 100 to 150. In this case, on this last rally, it's over $200. So what we try to do is capture 30, 40, 50% of that move and try to kind of hang on as long as we can once we're positioned.
Now, were you surprised by the significance of that move, Gary? Like you said, it's kind of out of proportion from historical moves. So what drove that, and were you surprised?
Well, when we saw gold go down to, I believe, 1465 mid-March 2020, that's when the pandemic just had become global. And I was surprised that it was sitting that low. But subsequently, we saw it begin to rally and actually from March to August go to the all-time record high of 2,088. I was surprised to see it retrace to the level that it did following that. But when you look at the highs of 2010, middle of 2011, we hit $1,910 and then had a multi-year correction, taking us down to about 1,020. So this was a multi-month correction. It was steep, but it was about 50% of the rally. What surprised me on this last leg, the one we're currently in, where it hit a top of around 1,960 and then traded lower, is that we've seen it rally about $200. And that is a large rally, as you know, for gold and a single leg. We've seen it soften right now once it hit 1,900, but I'm convinced it will over time move higher based on the fundamentals behind it. And that is the monetary policy of the Federal Reserve. We've got interest rates near 0 to 0.25%. They are doing quantitative easing, meaning they're spending $120 billion per month to buy assets their asset sheet has now swelled to over $7 trillion. Back in the 2011 period, when they did their first QE1 through QE4, they swelled it up to 4.5 trillion. Then they tried to kind of back off, and they got it down to about 3.7 trillion. And now it's swelled to over 7. That, coupled with fiscal stimulus, which is real spending, we had 4 trillion last year. When Biden came into office, you can add another 1.9 trillion. And now he's got the infrastructure program on the pallet, so to speak. And so they're debating whether it's going to be 1 trillion or 2 trillion, whether they're going to try to push it through all Democratic or have it bipartisan. But that's real money that gets spent. And that has to devaluate the dollar. And of course, gold being coupled with the dollar means that if the dollar continues to go lower, gold will go higher based on that. And then any buying that comes into it adds to it, any selling subtracts from those changes. So that's really my current take on why I think gold will go higher.
Yeah, and so I appreciate that. And relative to the dollar, that makes absolute sense. Something that came to mind I want to ask you now is, so it's a two-part question. Number one, we saw this $200 move in gold simultaneously paired with the crash of Bitcoin. Is that a coincidence, or are those two things related in your opinion?
That's interesting. Obviously, when the cryptos, Bitcoin, Ethereum, for example, were running to these crazy highs, it took some of the luster out of the speculative aspect of trading gold or silver, for that matter. And when it came down, I think that interest shifted back to the safe haven asset class. Cryptocurrencies are an interesting animal in that intrinsically there is zero value to it. However, the value that is created is supply and demand, or desire to get it. And so you've got extreme volatility, and no one can say for sure where it's going to go. Some people are calling for incredibly high pricing. Some people are calling for, it to stay or maybe even go lower. My take is that gold is unique in that it has the same buying power now that it did 100 years ago. Because when you look at it, 100 years ago, if you had a $20 gold piece or a $20 bill, which said backed in gold, you could go to a bank. You could take that, have a night in the plaza, buy a suit, and eat a steak dinner. Now, carry it over to 2021. If you had a $20 gold coin or a $20 fiat currency, well, the fiat currency would probably not even buy you the steak dinner. However, gold is sitting just below $1,900. And with $1,900, you could still get a room at the plaza, buy a suit, and have a steak dinner. In other words, the beauty of gold is that it has maintained its buying power for hundreds of years. And there's nothing that has that kind of stability, regardless of what happens to currencies, regardless of what happens to the cryptocurrencies. Gold is a steadfast, really strong way to hedge against inflation. And that is the best illustration I can give you. So while there are other avenues, there is nothing that will ever take the place, I believe, of gold.
Interesting. Yeah, no, I appreciate that. And I agree. I mean, I'm a Bitcoin investor and in a couple coins, but the conversation that we've experienced for the last 6 months, sort of the Bitcoin versus gold conversation, is almost like a non-starter for me, because you're comparing, to your points, an asset that has held value for literally thousands of years, the rise and fall of hundreds of empires, hundreds of currencies, not just the crash, but the utter collapse of hundreds of markets, Exactly. And you can't compare that to a 13-year-old technology, which I'm actually quite bullish on, but they're apples to oranges. They're not the same thing.
They are. And what I'm impressed with and think will stand the test of time, so to speak, is blockchain technology. Not necessarily any given cryptocurrency. Right now, the front runner is Bitcoin. It's kind of the Kleenex, let's say, of tissue, if you want to make a comparison. It is the brand name. But at the same time, it's relatively new. Which coin will succeed and which won't, I don't know. I can tell you that blockchain technology is not going anywhere. Even the countries that are going to have their own digital currency will have a modified formula of blockchain because they still want some control. And the only thing that I can compare Bitcoin to, and this might sound odd, is what happened with tulips in the 1700s. They artificially got inflated with no real intrinsic value. And there was a time when a bulb was worth the same price as a house, and then it crashed. We kind of see, when Bitcoin runs up as high as it does, what was it, 55 or 60,000 per coin?
Yeah.
And then crashes back down to 30,000. It tells you that it is highly speculative. And the underlying asset itself, while the technology is fail-safe, blockchain is an incredible new idea that will stand the test of time. The cryptocurrencies that do well is anybody's guess.
Sure. Okay. Now, you mentioned Biden's infrastructure plan. And so I got to ask you about copper. We haven't talked about copper, but, another commodity hitting all-time highs. And suddenly I'm hearing voices on both sides. It's been mainly bullish copper for the last year and overwhelmingly bullish copper. But I caught up with David Rosenberg recently, who's now shifting his tone and says, we've reached the top. The secular copper bull market is over. What's your opinion, Gary?
Again, let's go back to fundamentals to start where I think it's going. We have some of the lowest stockpiles of copper than we have had in 15 years. This according to Bank of America's commodity strategists. They're calling for copper to go by the end of the year, first quarter next year, to $5.89 or $13,000 per metric ton. You've got China, who's probably one of the largest producers of copper, and yet they're also the largest importer of copper. They've got a huge infrastructure program that's going to take copper. In America, we've got as you said, the infrastructure plan, and part of that is going green. Well, going green requires wiring and copper, and if you build roads, we redo the electrical grid. Copper is something that is running short in terms of supply as the demand goes up. I read an article today, it's about dated maybe 3 weeks old, that was looking for it to go to $9 per pound, 20,000 per metric ton by 2025. And that's why I'm so excited about it, because as a trend trader, when we get gold up near the highs, I'm still going to trade it. But I'm also going to advise my clients, there's nothing else like it, be trading at around $4.55, considering in 2020, mid-March, when gold hit those lows, copper was at $2. It has increased by 143%. That's why we're so bullish. I also believe getting to $5 is not an issue. It's when it will do that. And I also think by the end of the year. But if you're looking for a speculative endeavor that has the potential to really have huge growth in the futures market, there is nothing like copper. Nothing like copper. Now, that you can also look at some of the mining stocks. There are other ways to get involved in it, but copper's not something you're going to buy and put in a safe unless you've got a garage safe and you don't mind putting 25, 50,000 pounds in it. So it's something that you're either going to have to trade or speculate with different mining stocks.
Okay. Now, I want to ask you for something off the radar, Gary. So we've talked about gold, we've talked about copper, and I agree with your thesis and your sentiments, and it's very well supported in the marketplace. But what's off the radar? What have we not talked about? What's undervalued? Where is there opportunity right now?
I think the biggest opportunity right now is in copper. And the analogy I look at is when I began trading in 1984. And I remember palladium being about $100 per ounce. If I had known then that it would be the most expensive precious metal 30 years down the road, what could I do with that knowledge? You know the answer to that. Now, if in fact these analysts are right about copper going to $9 a pound by 2025, what can you do with that information? And I think that that's the strongest thing there is. We can look at silver, but silver has been mired in a tragically narrow range between 27 and 30. And it's been that way for about a month now. So it needs to break above or go back to the bottom of it. So I like silver on a physical level, but to trade it, I don't think it's time yet. Gold, I see a lot of potential. And over time, I believe that it will break 2000. And at some point, it will capture that all-time record high we got last August and surpass it. But I'm not one of those traders that's going to say, I think gold's going to 5,000 an ounce or 10,000 an ounce. It will, but that might be 100 years down the road, because over time, we've seen gold always maintain that same buying power. So right now, I happen to think that that's the wild card. By no stretch of the imagination is copper. It's kind of like palladium was 10 years ago. Nobody had the inclination that it would rise the way that it did. And copper right now, the fundamentals are so strong that it will have dips, but the dips tend to be shallow. It's kind of like the tortoise and the hare. And I look at copper as the turtle. It's moving slow, but it's moving slow in the direction that we're anticipating. And when it stops for a break, it doesn't take very much time. The retracements aren't that deep. So that's got to be hands down my favorite in terms of speculative endeavors. In terms of something to hedge against inflation, and inflation is hot. We know that. CPI came out at 4.5, the highest we've seen in quite some time. Gold is going to be the investment of this decade in terms of something that's steady. And although it will have peaks and valleys, although you'll get deep corrections, over time, it will gain value. And so I see a lot of strength in gold right now, but from a different aspect. That's my safe play. That's my safe haven asset play. And that's why I like to buy physical gold. I do trade the futures market, but I'm looking for, in terms of liquidity theory, where is my money best put in the sector of futures? It has to be copper.
Love it. Okay. Well, you're speaking my language, Gary. My portfolio is making the same bet. So, okay. It's been great having you on. Thanks so much for making the time. It's good to finally get you in front of my audience, Gary. So I do appreciate it.
I'm so happy to have had this chance and love to do it again with you and speak to the audience about what we're looking at and where we think their investment dollars might pan out the best results.
Okay. Sounds great. Thanks again.
You're welcome.
As always, if you enjoyed this content, please hit subscribe. I'd love to have you on the team. And if you want to take the next step and go a bit deeper with my content, I publish a free weekly newsletter every Friday where I debrief my portfolio. I distill the top lessons I've uncovered from the guests I've had on this show every week. And I talk about sectors and industries that I think are poised to move, areas that I'm looking for opportunity, and places that I'm allocating capital. I love writing it. We publish every Friday. The link is right beneath this video. Love to have you join the tribe.